Well, if we were going to describe this morning's grain trade so far on this final day of trade for the week, we'd have to say variable. We've had a lot of information, though, that's the market is really sifting through, and I want to bring you all of these numbers here. A lot of them have to do with export sales numbers, and export sales numbers this morning are really rather respectable, and we'll get an update on this from Jim McCormick here in just a moment. We did have overnight sales of corn, and it totaled 245,000 total sales. 125 of that went to unknown destinations. 120,000 ton that is, went to Spain. And then when we look at the soybeans, 198,000 ton went to China. So let's bring in an expert here to talk about all of these numbers. And Jim McCormick is here with us with Allendale Incorporated. Jim, these are pretty respectable numbers for overnight sales.
Yes, they are, John, and it's kind of nice to see these bean sales, especially. The government right now is very aggressive for the bean sales this upcoming year. They've got us about 80 million bushels more than the previous years, and the actual pace to date, we were sold about almost 43% of what the government forecast to sell. Normally, we're about 58%. So we are definitely behind the pace at this time. This is the time of year we should be selling a lot of beans, so we need to see these sales. And it's, as you can see, the market's a little bit excited about seeing them today, at least in the beans, with them trading a little bit higher as we speak.
Okay. We are hearing reports maybe that the estimates out of Argentina are to increase their corn acres. Has that been factored into this market yet?
I think I think that's maybe part of the reason why you're seeing the corn market down a little bit right now. The corn's trading a little bit weaker. Plain and simple, there's a lot of corn in the world right now, and to see Argentina plant more corn, it is putting a little bit of pressure on the market. That really shouldn't surprise the trade and the traders of the world. If you look at the tax incentive right now, if you're a producer in Argentina, it makes a whole heck of a lot more incentive to produce corn because you're not getting taxed near as hard when they export corn compared to beans. So that's probably why they're shifting over to corn.
Let's look at these corn numbers here together, Jim. And as we do, we see where December corn is down 2.5, 346.5, and March corn down 2.5, 360 1/4. We go over to the soybean market, and here we find November soybeans up 1 3/4, 988 1/4. January beans up 1 3/4 at 998 3/4. So this bean market being up anywhere from 1.5 to 1 3/4 cent. Is this really reflecting that temperament because we are overall still behind by about 10% in our exports?
Oh, I think so. I think, what's really affecting the bean market specifically today was late yesterday, the EPA administrator, Scott Pruitt, sent a letter to the lawmakers stating that the recent proposals that they were going to make to revisions to the RFS standards were not going to move forward. The biofuel blending mandates next year are going to stay at or above the proposed levels. Now, a lot of people were worried that maybe some of this talk was they're going to drop the mandate for biodiesel specifically is what they're worried about. If you notice, bean oil is really running today. It's currently trading about 50 points higher, and that is spilling into the beans more than anything else, I believe, is that optimism that maybe or relief, I guess you could say, that we're not going to see the bio mandates cut back like the fear was just a few weeks back.
So this RFS story did factor into this grain market then, to a degree.
I believe it did to a degree. The market, the bean oil spiked right on the opening. The computers bought the story. Now, this was dated. They actually sent the letter out late yesterday. I would guess that's part of the reason why the market rallied yesterday. Probably some people knew this was coming down the line. But this is a good sign for American agriculture. I mean, we did not want to see the mandates pulled back. The congressional leaders in the I states really put the pressure on the Trump administration not to back it off, and it looks like it's a win for agriculture right now.
All right, Jim, let's take a real quick look at the wheat market here before we wrap things up, and we look at the Chicago wheat market. December down 431 3/4. We were higher a little bit earlier ago. July down 1.5, 476 3/4. On to the Kansas City wheat market, where July is down 1.5 at 477 3/4. July Minneapolis wheat is up 1.5 still at 641 1/4. And December cotton right now down 14 points at 67.17. When the market day report continues, we'll have Jim come back and talk to us about the livestock trade. Straight ahead. Jim McCormick is here with us with Allendale Incorporated. Let's get right to the Dow Jones Industrial Average. This has been quite a week for the Dow. 4 times already this year, we've broken above 1,000 points in 1,000-point increments, Jim. And so here we are. We're up 68 today at 23,231. You think this Dow is going to try to take a run at 23.5?
It feels that way right now. It is, it's all hands on deck buying futures right now, or just all stocks. The market seems to be pricing in this big tax cut. The thought is if we can get the tax cuts that the Trump administration is proposing, is that'll put a lot more money into companies' coffers, and they'll either maybe buy back their stock potentially or put more into dividends. So that's got the investors excited. And the first hurdle was passing that budget yesterday, which they did get passed. And with that passing of the budget, I think that's what's fueling today's push higher.
That VIX index is just kind of a gauge of how much fear there is on Wall Street. Where are we standing this morning?
Right now, the VIX index, I've got it down about another 750 points. It's trading at 11.4. That's a new low. For pretty much the market is very, very confident. We're not going to get a break. Now, my viewpoint personally is I think you'd be a little bit skeptical about this. This market has priced in an incredible amount of optimism on this tax break. Well, I'm sure you've heard the line, buy the rumor, sell the fact. So the fact of the matter is, once we get it priced in, or once they actually do get these tax cuts break, we might get a sell-off as that classic, wording comes into play, or if it blows up. The Trump administration's had a hard time getting all of its policies through. If it does blow up, we don't get the tax cuts through, you could see a pretty nasty correction in the market. Like you said, we've had a phenomenal run this year by all accounts.
All right. Let's look and see how the run is today over in the live cattle, feeder cattle, and the hogs. And right now, the live cattle market is trending a little bit higher. December up 80, 116.95. February up 65 at 121.30. On to the feeder cattle market we go. I want to get your thoughts here, Jim. November feeders are up 72 at 153.50. January feeders up 65 at 151.85. It seems like all of a sudden the optimism is back in the live cattle and the feeder cattle market.
It is the optimism's alive. We're running today. We traded cattle lightly at around 110 earlier in the week, but the box beef jumped big time yesterday afternoon, up 231 on the choice, up 167 on the select. That's got them optimism that we can get maybe steadied, maybe in a shade higher by this afternoon. And that's pushing it, and that's got these guys wanting to buy feeders. I mean, their optimism the cattle is going to go higher, corn's cheap, so let's buy feeders and walk the grain off the market, as they like to say.
All right, Jim McCormick, Allendale Incorporated. And before we wrap up, let's look at that lean hog futures and get everybody up to date. December hogs up 27, 64.52. February up 30, but May hogs off 10 at 76.75. And we're going to watch the Dow real closely today, Christina, because here we are taking another run, maybe at 23,500.
My goodness. My goodness. I think a lot of people are a little surprised that it just keeps on skyrocketing. We'll keep watching it. Thank you so much. Markets editor John Jenkinson.